Hello, 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 everyone. Happy Friday. Hope everyone survived and thrived on this trading week. We're just going to do a real quick peek in at the indices, and I'll show you a couple things that I am watching. So maybe you can look at some charts and then come back on Sunday at 3 p.m. Central, where we'll do an in-depth overview to prepare ourselves for next week. And remember, next week kicks off earnings season. So just want to give you something to think about, tonight and tomorrow and maybe Sunday morning as you're doing your prep, so we can all get prepared and positioned correctly for next week. By the way, if you are new here, please do consider surviving. Consider subscribing. I hope you're surviving. Ringing that bell and hitting the like button. Longer term viewers and members and people on the other platforms like Twitter and ShareVision. Please leave some comments and subscribe to those platforms and follow us on Twitter and do all that other fun stuff. Again, let's see. Hello, hello, Wavy. Another day of sell, sell, sell in the Nasdaq. Not so much in the Dow rallied. S&P was only down 24 basis points. It was a little back and forth in the S&P, but again, you have your high PE stuff getting sold until we get that another short squeeze, because you get shorts loading up then on some Nasdaq crap. So that'll probably get squeezed again next week, and then we'll probably have the big rollover. Options 22. Hope you had safe travels. Glad you are back home. Again, it was George, right? Geo Mission George. Afternoon. Great advice this morning. Sitting out was the best. Yes. Again, if you don't have anything to do, you don't have to trade. Sometimes the best trade is no trade. Again, just because the market's open doesn't mean you have to trade it. You wait for the setups. You wait for your setups. And then you execute on those. If there are no good setups, you don't do anything. You can always watch the price action. You can always practice some stuff. You can always back test some stuff. You can always research some stuff. Or you can just take the day off. If you go into the morning and go, this is a bunch of crap, take the day off. There'll always be another trading day. It's what's great about being a trader or a day trader or a swing trader. Even an investor, you might have to reposition some things in the morning or in the afternoon before the close, and otherwise the rest of the day you can chillax. So let's just take a glance at this real quick. Again, we'll do the in-depth thing on Sunday. The S&P down 26 basis points, nearly an inside day, not exactly because it made a higher high. We'll just peek in on the price action. Again, we had the double selling off with momentum bars. Look at that. I actually hate when it gets into the tick, because it's so hard. If you have resting orders there, you might not get filled. So, but that was a pretty accurate thing. Then there's actually another little topping pattern into the close, but this was more of a distribution day. It's still holding up above its first head and shoulders signal, and I'm still watching for a rally next week. Holding the 200. Remember, the 200's an area, lots of buying pressure in down here, and we still have the flag pattern in play. So we will be doing some more analysis on that next week. Nasdaq, which has the high PE stocks, which get hurt, especially unprofitable tech, is those are the ones getting hit with the interest rate expectations and interest rates rising, but still retesting yesterday's low, not breaking below it. Again, now you have a triple bottom. Again, we had the little double in the morning, hit all those targets. So that was essentially the trade. That was the trade. By the way, this is a triple bottom, but I'm taking it with a grain of salt. So we shall see. Now, this is a move back down. Does this reverse enough for a double? We will check it out just to be ahead of the game. Not quite. Not quite there. So we don't have a potential double down there. So could this continue a sell-off in the money? Yeah, with the 214,181. But this has proven to be strong support so far. And the Dow, which is up today 40 basis points, never hit the targets on the head and shoulders at all. So that, that's why some of the stuff's holding up pretty decently with the amount of selling pressure. Now, the big boys are doing some selling and readjustments. I still think retail's doing some stupid buying in here. That's why I'm expecting another pop higher. Again, other than that, there's just a little double coming back down, reversing strongly, and then retesting support. So we will go over the Dow in depth on Sunday. Just wanted to give you a preview of some things I am watching. Again, hello, William. Thank you, William. Multiple doubles on the S&P today. Yes, there were. There was great. There's some back and forth trading in the with the doubles today. And again, those are not long-term trades. Those, a lot of them were just, hey, I'm in, I'm out. What about the ESS and shoulders on the monthly chart? If this, my long-term target will be 3,500. Let's on the monthly chart. Well, you're really go. ES head and shoulders on the monthly chart. I don't have it. You might. I do not. I don't have a well-formed right shoulder. I mean left shoulder, sorry. This could almost be a right shoulder, but let's check the weekly. Now the weekly, this would be, again, now it would be a downward sloping shoulder. I would not trade this as a head and shoulders. You might. It's more of getting to a rounded top distribution pattern still. So you might, let's see, and oh, sorry, that was sorry, I looked at the wrong market. That was a Dow. My fault. Here, let's check this on the weekly. All right, see, now here's shoulder, head. This was the prior shoulder. This is almost a double hump shoulder coming in. So I literally don't have anything that falls into the way I trade them. The way I trade them with my specific rules don't have anything that falls into that category. You might, which is fine. 3,500. I mean, that's the nice weekly area of the weekly 200. And, that's also a great long-term target anyways. Because that was the last major support base on the weekly back from September to November of 20. So do I like those potential targets still? Yeah, that's a good potential target for a long-term trade. Let's see. Growth got smacked again today. We'll take a look at that, and then we will take a look at some other stuff. 4-hour ES looks more in line for the head and shoulders. 4-hour. 4-hour, you could actually start to look at this as a head and shoulders, and the other way, why don't we here? That would be, I'm going to pull this one off for now. So here's what now this is an inverse head and shoulders. So you have a shoulder, head, double spike head. This is like a mohawk head and shoulders. Shoulder, it's very, very sloppy. But it could be definitely traded. It's reversing this move. That still, it looks like it still qualifies for me. So that shoulder, this is a very weak left shoulder versus strong right shoulder. Let's just take a look at that. Then we'll look at some more stocks. And we'll take a look at some of those ratios. Because we can go back and do this more on Sunday. I'm not going to make this a horribly long session. But we don't know where it would break yet. But it looks like even if it broke Sunday night, Monday morning, the first and second targets are within the reversal move. So that could be valid. We'll take a look at that more. Let's see what else we have. You were already bringing up ratios. Yep, that got smacked really nice. What's interesting is we do have some potential buy setups in here. So that's what I'm going to be watching for next week in case those trigger. Right to the 62.5. So this is a key area. Plus I might get a % beat buy. So we'll have to keep an eye on that to see if it triggers. This one we had that double, which yesterday completed and today just then kept going. So this one I think dropped below the 62.5. Nope, right there. Look at that. Wow. Holy smokes. Right to it. Can't make it even works with the ratios. Mega caps pulling back nicely. I'm watching for a bounce in mega caps next week. Again, these would be short-term plays, not yet to that 62.5. These would be short-term plays potentially, and I'm waiting for things to trigger. Like, since we're looking at this, Microsoft, we had the double top coming down. You got some support right there. Now we have a nice 4-hour double bottom with a potential gap play to the upside. Could it eke out a slightly lower low on Monday? And if it dives a lot lower, then the little doubles off the table. But this is one of the ones I will be keying off of next week. Gap fill, look at that. Double target right to the gap fill. Fantastic. And I might have a 4-hour %B buy signal on a 4-hour close. The first 4-hour bar Monday morning above this high of this bar, 299.81. If you want to play it a little safe, just watch for the close above 300. Yes, this is against the daily rotation zone or the 4-hour rotation zone, and we don't have the first cross of this, so it is slightly aggressive, but definitely a play that I will be watching for next week. Another thing I'm watching is where am I? Sorry. By the time it gets to Friday afternoon, I get a little worn out. Remember, we had the double on the XLF financial. Little bounce after getting below the targets, little bounce, and I'll review this in the sector overview. Why am I bringing it up now? We're getting a bounce. I have some potential plays that I'm watching for. And the XLF, just for a sneak preview, remember, come back this weekend. I will be posting a pre-recorded sector overview, but this did not tip into a sell signal. So financials are still a buy. Financials have earnings coming up also, but look here. Here's a couple things I'm watching. Morgan Stanley, we have a longer-term potential double, which may never trigger, but right now, this actually triggered an aggressive buy signal. Yes, it is against the daily rotation zone. Even if it pulls back, it's fine. The stop has to go below yesterday's low. But this could be due for a little bounce play in here. There are some, if you follow DeMarc stuff, there are some buy signals from DeMarc stuff in here, which is pretty good for coming out of here. Also, you see cycle bottoms right here turning up, starting to turn up. We already got that %B buy and the RSI turning up. So we have a number of things that we could get a nice little bounce play in this. And then if it does get a stronger rally, we could try to roll it into something bigger. But that's doubles a long way off. That's one I am keeping a really close eye on going into next week. Another more even aggressive play, Citi triggered a buy signal today. Again, a %B with the cycles rolling up and RSI coming up out of deeply oversold condition with a bounce play again against the rotation zone. So you have to be a little nimble here, but this could be in for a nice little decent bounce. Also, because look at Citi on that weekly basis, and earnings are on March. Wait, hold on. Let me get to this one. Earnings are coming in the 14th of April. So it could even get a nice little bounce into earnings. Couple things just to keep an eye on if you're looking for some aggressive plays to do. What else? What else do we have? Just taking a look at some of the other mega caps. Apple's actually triggered a double top, but not been able to sell off, and no stock buybacks this week. So Apple holding up pretty decently, and on a close above today's high on Monday it would actually still be a daily rotation zone buy signal. So gonna watch for that one. What else? Let's see if what else we have. CPI on Tuesday could send us down some. It could. We'll see. We'll look at that more on Sunday. Nvidia continued down and closed below 62.5 on the latest swing. I was going to call up Nvidia also, because that's one I am not watching. Because now, yes, we could get a bounce in here. It is against key support, but this then I'm watching for a longer term retest of the lows. Even if the bounce were to take me into a partial gap fill with the declining rotation zone, Nvidia is nothing I'm watching. This would not be my preferred play. Even though there's a buy setup and we're at cycle bottoms, just like in some other stuff, why is this not my preferred play? Why would I rather play a Microsoft versus an Nvidia? Because Nvidia, it couldn't hold the 200 again. It's got the declining rotation zone. Yes, it has an aggressive buy setup, but this could just be a very weak sauce bounce. It's got a gap fill too here. So it could just be a weak sauce bounce into the gap fill and then a rollover play versus something like a Microsoft, which we have that potential 4-hour double and the gap fill play, which could easily take me back to 310. So between the two, if you said, Mike, you have to take one trade and you have Nvidia or Microsoft, it would be Microsoft all day long, not Nvidia. Can we look at CF stock real quick? Sure we can, William. CF, if I could type. CF. Again, back to the daily rotation zone. There was a %B buy right there out of the daily rotation zone and coming up to test this. Is this that doubled? No, I haven't looked at this in a little while. This getting oversold cycle tops, but could this easily, if it does pop above this 109.51, I would definitely, if you were long here, again, can't give specific trading advice. Personally, I would be taking something off the table and raising stops. Not the whole thing yet. Because here's your next reverse harmonics. 112.40 would be the next stop raise, 114.99, and I'd be trailing a stop on that pretty closely, at least below the daily rotation zone for a long-term play. So CF still moment, just start getting into cautious mode because it's looking a little toppy here. If you wanted a tighter stop, I just keep it below about 102 area. There is some decent selling pressure up here, but again, you're trading with a strong trend, and everything's getting very toppy on it. So I would not give a lot back. This is something I'd also watch for a longer term play on a pullback. Looks like technology stocks. I mean, they just completed. Microsoft completed its pattern. Google, we had the double top coming back down. So this, by the way, the longer term double bottom is still in play. But we had that double top pattern. You see coming back down nearly to the final target. And I don't have a reversal signal in here. There is a potential aggressive entry on a 4-hour close Monday morning above the high here for a little quick bounce play. But again, I'd still watch for the play like in Microsoft. What is my long-term target on Nasdaq? Again, my longer-term targets, my initial longer-term target is at 1290 on the next down leg. And longer term, I actually think we can eat. Then I'm going to 11,689. Then if we break that, this is my key area. 10,430 would be absolute lows. I don't think we'll get there. I actually think we could get to, on a major sell-off, about 11K. But here's my longer term area I'm really focused on. And that's a 50% up move from this bottom. But my next targets are still here. They're still the same targets from before, 12,090. Uh, Twitter. I was looking at this. Twitter, I'm still watching for the full gap play here. You see into the, I would not be surprised if we got a slight bounce up, but longer term, I still think we're going to fill at least this gap down to about 41. And this is now, see, everybody who bought the Elon news is underwater too. So there's going to be some people bailing on this who don't have any risk tolerance. And I would not have chased this higher anyways. So I think you're going to get some selling pressure still on any bounce. And we will get, I'm still waiting for below that 62.5 for a shorter term gap fill play, especially because that's going to take out the 4-hour rotation zone also. And it's right at that daily. So that would be trading within the daily, and then I wouldn't be just surprised to see the collapse back down. Because there's nothing, earnings are coming out at the end of April, so that's still 3 weeks off. So you could get some downward pressure and then a slight rally into earnings. Hello, Amit. Great memory. Yep, George. Thank you for just reinforcing. Geo mission is George. I like to have it reinforced. I'm glad you're here. ARC, which gap gets filled first? Well, ARC had this. Let me pull off a little of this real quick so we can see. ARC had this double top pattern. I had it on my other charting platform. And that already completed. My guess with ARC... What this is which gap gets filled first? Oh, I hate those kind of questions because right now I'd have to caveat it. If we get I think we could be in for a short squeeze of junk some point next week. If we get that, this will fill the gap first to the upside and then roll over. If we close below the 62.5 on Monday, then I'd favor the downside gap fill first. That's how I'd have to caveat it, because right now it's in no man's land between that 50 and 62. But if you do roll up and we get a short junk squeeze, because junk's getting heavily shorted again, and the Nasdaq is still held up remarkably well, even though it's hit the second target on the double, we could get another one of these silly short squeezes to bounce it next week, and then the big rollover play. Hypothetical, when you front run a 15-minute double that has a 5-minute close, when do you front run a double that has a 5-minute close? Also, whichever play 15-minute double that hits the first target before it triggered on a pullback. I still will play, to answer your second question, on a very short-term one. I will, especially if it's within my direction of my longer-term or my medium to longer-term bias. Okay, so I don't mind playing a very short one on even if it hits the first target. Now I keep it a tight little area on that. I don't want it to pull much farther back than, you know how I do the lines between the peak that triggers it and the candle bodies. I do not want it to pull back more in those candle bodies, else I won't be interested in it anymore. When do I front run a 5-minute double? In very active sessions, and it's got to be in a direction, again, of the longer term direction I'm looking to play. So if we have a double bottom on the 15-minute, and let's say it formed right prior to market open on a 15-minute, and then we're triggering it with starting to get some momentum into the open, and I'm already looking for a bullish play, because let's say we're in the 4-hour rotation zone going back up, that's when I would front run it. If we're against like the larger rotation zones and it's facing selling pressure, I would not front run it. I'd wait for a close. And if the close runs away from me, then it was not my trade. I don't mind missing a trade. I'd rather miss a trade than chase a trade. Chasing a trade can get you in a horrible reward to risk position, or you're trying to fudge your reward to risk so you can get in it, and that's never a good scenario. Again, there's always another trade. Yeah, I don't like to hold the high PE names besides little swing bounces, but you can also play them with some options. There are some wild swings. I'm looking for a short opportunity. USD JPY is approaching weekly resistance. Well, let's take a look. I should set up a forex. Yeah, this could be interesting. I haven't set up. That's been a monster run. A monster run. Wow. I've been watching this, but I have not been updating it on this platform. This could be into a very strong toppy area. Again, even if it pushes higher next week, you got divergences, you got cycles going to roll over, and you have a major potential double top in here. Does that have to trigger right away? No, but it's something I'm watching with waning momentum to at least retest the into this weekly or the daily rotation zone, and that wouldn't even reconnect with the weekly rotation zone. So I like that play, potential play, Rich. There could be an interesting thing, especially let's see on a shorter term 4-hour basis. You start breaking down. I mean, this is some significance right in here. You start breaking down below there, that could be an interesting play. And look at that. That's right at the daily rotation zone. Below 123.37 could be an interesting play because then you could run it down here. You have some clear path. Little stopping point in here. But other than that, this little horizontal channel it broke out from. But other than that, then you have clear path back down there. Interesting play right there. Nice one, Rich. Sterling, MO's monster move. Couldn't get to my second harmonic extension this afternoon. May have a little pullback here to start in the short term if growth rallies. Yeah. Again, we're long. MO. I'm watching this again. Chip away here, chip away here, chip away. Pausing bar now breaking through. Get longer term. I'm watching for stuff, but could this easily pull back even to the daily climbing rotation zone? Yeah. I mean, my stop is back down in this area for the longer term play. So I don't mind this pullbacks. And sometimes this can get a little volatile and you see the weekly rotation zone in your other key area that it based at was here, and my stop's actually below this area. So that's just a long-term play. You just do get, so especially if growth kicks in again, you could get a multi-day pullback like these. So I'm prepared for those. That's why I'm not running a very tight stop on it. But my next major target is this 55 area. I really like these basing plays that chip away at something, then break through. It's like growth has been in correction since late October 21, yet index barely corrected since January 2022. It's like mega cap is holding up the Nasdaq and S&P. A lot of the mega cap is still holding it up because you have a small percentage of stocks making up a huge chunk of the index. It's like seven stocks are making up close to 25%. So depending on what they do, and if they all get a rally on, it's going to really boost that index. Or if they get a major pullback, it will tank the index. Hey, Danjet, welcome. Yeah, that's just something. That's why I tell people when you're learning to trade some of these patterns, wait for the close until you really get them down. Because the more price action you watch, and then there's the nuances of when you get in, or when you don't wait for the close and everything else. But that just takes time and practice. You're better to wait for closes when you're first learning a pattern because that triggers your high probabilities, and don't mind missing some of them. on that note, I've been waiting for Lily to pull back in and has run away from me. Then yeah, Lily again. Lily had this sideways base, and over the last 3 days, this was the play right here. It was the gap and then runaway play. That was a monster rally. At this point, I would not be chasing Lily. They'll get a pullback. Lily will get a pullback. You see on weekly, see this is nowhere to chase right now. Because these stocks, when they turn, keep this in mind. When this thing turns, it could easily return to this 50% level over a series of 3 weeks. It could do another move like this. Okay? So this is where I'm not chasing Lily. I actually have an alert set. Might need to bump it up just a hair. Why do I have an order? We're at cycle tops, RSI tops. Oops. Hold on 1 second. There we go. Sorry, something changed on my computer. RSI tops, cycle tops, pulling way away from the weekly. I'm just patient waiting for the bigger pullback on this. I'm actually going to right here. There's no way I'm chasing this, and that would actually freak people out if it dropped below this little area, but I'm focused back on here with the bigger pullback because you can get some wild swings on Lily. So, and if you didn't think it was going to get there, this is somewhere where you could do a 2-stage ad, and I planned it out ahead of time, like a pullback to this into the daily rotation zone, back to this is a partial ad. Then if it drops back down, even here or here, that's your full position ad, and then you have a nice price right in here for another rotation, longer term rotation play back up. How do you see the lockdowns in China affecting us? Seems like the COVID situation is only getting worse for them. Yeah, something weird's going on with that too, because literally they went through supposed multiple variants that we've all been through, and they're now all of a sudden they're in these major lockdowns, like in super panic mode. Something's very odd with that, and it's just going to be more supply chain disruptions, which will cause issues, especially with shipping. And Shanghai's essentially closed, so we're going to see more supply chain constraints and shipping issues. So it's just going to keep pressure on inflation. And also, if you want to see other things, have you been following what's going on with the bird flu in this country, with the chickens, the turkeys, and everything, and eggs? Go start researching that one. That's going to be another shoe to drop in this country that will hit inflation too. It's like the perfect storm. So, do we have time for Boeing? Since you're a regular, William, it's not. If you're playing options, yes, it's bleeding out because it's not moving. I don't know you said you're long, but I don't know your exact position size. It's at cycle bottoms, but if you're playing options, your timing. I'd be watching right now for a little pop up with the gap fill play, but longer term, I am not bullish on this. There could be a little pop up fill play in this, but that would be very short. Then longer term, I'm watching for another rollover, and that's something after this breakdown right here, and if you look. Just always remember with stuff, put that 62.5 on, that closing right at it, but then this closing below it, it favors, even if you get the short-term pop, it favors a return to this low area. So keep that in mind with your position and manage it accordingly. Here are a few stocks to check out. Let's take a look at them real quick, then I'm going to wrap it up. I am really tired. Sorry about that. AAP already... Oh, that was Apple. I'm like, how did I get... AAP, nice breakout above the 200. Going into some resistance. Yeah, stuff's getting overbought. I'd watch for a pullback play on this. There could be a nice pause or pullback play. No short-term harmonic. Yes, I'd watch for the. I'd start watching for a quick little pullback play in this advanced auto parts. I like trading this. This is fun trading. Sometimes with advanced auto parts, you can get some good swings in this, but this is I would not chase it at this point. That's pullback to me. ZTS. That could be interesting on a play back to 197 with the rising rotation zone, a breakout from this base. You could try to do something on a nice little pullback here, and then if it really gets going above about 204, you're targeting 208. Your first target to that could be an interesting play on a little pullback for me. BG, again, breakout to new highs. Hold on, let me get to here. Again, that would have to be, again, a lot of these things are entering potential cycle tops. Now, they're not rolled over yet, so I wouldn't be chasing aggressively here on some of these. I'd be watching for backfill plays. Especially with this one, likes to dip into the weekly rotation zone. So I would definitely be watching for another pullback play to your daily rotation zone that at least dips price action into that weekly area, and then watch for a buy. For example, this was a buy right here. Okay, this was a buy. This was a buy. So those are the kind of things I'd be watching for the pullback. There's got decent volatility. This was a buy. Actually, this was a buy right here. So those are the kind of things I'd be watching for on BG. HCA. Bounce back play in healthcare. There could be a little more room to run to the upside. You're still in a clear path. You've already hit your first target. I'd be definitely, if you're already long, raising stops here. Here was the buy. There was actually a buy on it on the 6th of April. This was the buy pattern back above the 200 and a %B buy, running up, hitting the into a clear path. Your first target was 258, 259 roughly, and then your second target's right up here. If I could choose the right line. So 264.45 area. And you got a lot to chew through up here, so that's definitely a raise a stop area on HCA. TSCO. Love TSCO. Love myself some TSCO. Tractor Supplies. There's been some long-term great trading in this thing. Breaking back out. I'm really interested in TSCO back above 238, back above here, which it keeps chipping away at. That's a play I'm really looking for in TSCO. Get above here, little pullback play. Could be very interesting for Tractor Supply. Tractor Supply, you see based here with that double coming back down and now chipping away at this price level again. That's a good long-term breakout play. And VET. I don't have anything on that right now. It's starting to break down. Cycles aren't yet at the bottom. This would be just one I'm sitting on my hands. I'd be sitting on my hands watching for a better longer term pattern. There's nothing I have in that. Yeah, tag your jack with Lily. Just wait. Be patient. There'll be another play in Lily. Don't worry about that. People don't realize COVID is still here. As I said, slowly Toronto is entering back into lockdown. It sucks, but there's no real solution, even for the vaccines are only effective for a few months. But all right, if people are getting sick, how bad is it? I mean, there's still cases around here, but generally they're mild, and a lot of people are done in a day or two. And there's the hospitalizations aren't there. That's why I'm really wondering what's going on in China, because they're ramping it up like it's like super bad. You are welcome, George. Hey, you have a great weekend. You have a great weekend, William. Have a great weekend. What a long week. Time to unwind and come back to this world of markets soon. Again, everybody who wants to join me Sunday afternoon, 3 p.m. Central Time, I will be here. We can look at some more stuff and do a little deeper dive into the indices. Until then, have a restful evening and a wonderful Saturday, and I'll see as many of you can show up. Yeah, I know, but you're telling me that there was literally hardly any cases for the past over a year, and now they're exploding. No, not buying it. Not buying it at all. Something's different. Something's different. I know they've had a zero COVID policy for a while, but you're telling me with all these variances that there was little, there was nothing, because I mean, look at all the lockdowns that were in the U.S. and Canada over the variants for the past year and a half. And you're telling me they barely reported any numbers, and now all of a sudden they're putting up mobile hospitals. They're complete locking down Shanghai like it's the end, like it just broke out. Something's weird. It's not making sense. And who knows? Need a reason to further crimp supply chains, and it could be strategic. It could be a few other things. I also think there's something with a new variant that's hitting kids a lot harder. So we shall see. It will be interesting, and I will leave it at that. Yep, truth will come around soon enough. Well, it's still China involved, so we shall see. Uh, Again, have a great weekend. Talk to everyone later. Hope you got some trading ideas for some stocks to do some more analysis on this weekend. And if you want us to look at anything again on Sunday, we shall do so.